The past year has been anything but easy for emerging and developed markets, where equities are facing challenges on multiple fronts. Now, due to resilience and outperformance in the Indian equity markets, global exchange-traded funds have been steadily increasing their exposure to Indian equities. Global exchange-traded funds are simple investment products that allow the domestic investors of one country to take an exposure to international indices passively. As seen on this chart, top 10 global ETFs dedicated to emerging markets have all increased their India weightage. Also among foreign funds, BlackRock, Vanguard, WisdomTree have consistently increased their exposure in India. Now, our take on this is global investors and fund managers see India as a safe haven in the midst of a storm. The interest in India is fueled in part by recession worries gripping other large economies, as well as the expectation that India will be relatively less affected than its peers. Bad loans were a massive problem that was plaguing the banking sector in the country, and the need of the hour was to identify the defaulters. By forcing an asset quality review on banks, the RBI under Mr. Raghuram Rajan did precisely that. Since then, banks have been cleaning up its books, which can be seen in the gross NPA and net NPA ratio declining. However, we as a country still face a high volume of NPAs compared with other major economies. While we talk about this, we will also discuss why NPAs in education loans have seen a steep rise recently. A cause of concern for banks has been high defaults being reported for education loans, causing NPA in the segment to rise at around 8%. Now, this is making banks more cautious and at the same time delaying applications for education loans. Now, one key factor is that students who take out large loans are unable to find high-paying jobs. Now, rising unemployment and pay cuts in these current circumstances are also other reasons. While the rising NPA in the education segment could hamper the growth of bank credit for higher education in the country, we don't believe it will massively impact the improving asset quality underway, as the education NPA is a small part of the overall NPA under the smallest segment, that is personal loans. However, we do believe corrective measures are required to sort this out. Despite the continued decline, India's NPA ratio is again one of the highest among comparable nations. However, we do believe that the Indian banking system is resilient and there is visible signs of asset quality improvement. Now, the overall improvement in banking asset quality is the result of years of corrective actions. To further accelerate the NPA resolution process, the National Asset Reconstruction Company is also underway, which is likely to further solve the NPA problem. But going forward, the improvement in asset quality can remain sustainable if the quality of monitoring the credit remains effective. Natural gas prices are spiraling since Russia's invasion of Ukraine. However, Indian consumers still remain relatively less impacted. Now, this is because in India, gas prices are controlled and fixed by the government once every 6 months, that is April 1st and October 1st. Now, analysts expect the government-dictated price for natural gas produced in the country to be revised on October 1st to record levels. Let's discuss this. Due to the spike in energy prices witnessed in recent months, the rate paid for gas is likely to rise to $9 per million British thermal units from current $6.1. This will be the third increase in rates since April 2019. Now, the huge spike is because prices for October 1st, 2022 to March 31st, 2023 is based on the average prices from July 2021 to June 2022. Now, this is the period when global rates shot through the roof as seen on the charts on your screen. Natural gas is used to produce electricity, also it is used as fuel for producing fertilizers, and as CNG to use as fuel in automobiles, and cooking gas for household kitchens. So now any rise in these prices will fuel inflation in the country. So what does these news mean for you? The increasing exposure in Indian equities shows India is determined to occupy its well-deserved but long overdue position among the world's largest economies. This will have an indirect positive impact on you. With improving asset quality levels, the Indian banking system is well positioned to support economic growth in the country. This will have an indirect positive impact on you. Any rise in domestic gas prices will have a negative impact on a consumer. However, the rates are expected to be revised on October 1st review meeting, so we must wait for the outcome of the meeting. For now, this will have an indirect neutral impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.